Hello, traders. Mark P. Markets here. My name is Mark Principato, and I'm a chartered market technician. And thank you for joining me for another exclusive Bitcoin video analysis here for FX Empire. So in this session, I want to talk about the current price action and what it means in terms of reward risk and potential, trade potential over the next few days. All right, so with that being said, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. Also, if you'd like to know more about Greenbridge investing, I will leave a link in the descriptive portion of this analysis so you can check out our 7-day free trial and our chat room and all that stuff there. All right, so let's get started with Bitcoin. First things first, we have this bullish candle. Okay, it's not an engulfing candle, but you can see the idea here. Strong close. Okay, that was the candle that closed just about an hour ago, and it closed just above 47K. Now, I've talked about this previously. This technically is a buy signal. You have the double bottom area off of the 44, 43 area, and it closed strong just above 47K. The thing is, this is still a highly vulnerable area because that 47K is part of a previous resistance range, as you can see over here. So there's still a chance that this thing fakes out. So if you take the aggressive long, first of all, as a swing trade, your risk needs to be defined at around 43K. So automatically, you're looking at about 4,000 points of risk if your stop is slightly lower than that. If you put your stop tighter, then chances are you'll get stopped out in this midpoint area where there is a lot of random noise, and price can easily revisit that area. So you need to really put it out of the range. That's 4,000 points away. So that means that Bitcoin needs to rally to 51K or just over 51 for you to justify your risk if you take such a trade idea. Now, can it do that? Anything is possible, and if this momentum can maintain itself and it doesn't fake out, then it's possible to see those low 50s again. That would be a good area for at least an initial profit target, and then perhaps it can run a little further from there. But the problem with this whole thing is you have this large bearish candle, which is still in play. And what is also very likely to happen, and which is why I say this is still vulnerable, is it's very possible to see a lower high develop somewhere in this range. Could be 48K, 49K, 50K. If the lower high develops in that area, then it looks like we'll get a consolidation. Okay, if it fails, if price fails in this area, I would not classify that as a trend change. Okay, I would call that as a consolidation, because then we have to see if price makes the lower low, meaning it takes out 44K at that point. This can take place over the next couple of weeks. Okay, so that's the area you really need to keep an eye on if you go long. The more conservative thing to do would be to wait for another test of the support 44K area, or perhaps slightly higher for a mini higher low, followed by a pin bar or some kind of bullish reversal. That would make more sense in terms of probability. But again, where it is now, it still qualifies for a trade. But because you're right inside of that resistance, the vulnerability is high. So you need to be quick if things turn the wrong way. Okay, meaning you can take a small loss quickly. You can adjust your size smaller so that you don't have to take such a large loss if it reaches that 4K stop, that sort of thing. Or you can just let the trade ride and see if it goes to the stop or not. Okay, if 44K is taken out, we're looking at the 41K support, that area there. And it's possible that after a lower high that we get something like that. If the lower high sticks, meaning it pushes to like 50K and you get a bearish pin bar or something like that. So those are the potential scenarios that we could see over the next few days. Don't get sucked into this and don't react to something like this so quickly. Okay, you have to decide if the risk is worth the attention that this thing is going to require. Otherwise, you're better off waiting for a better setup. Also, another possibility that we can see is if this thing can develop some sort of continuation pattern from basically between here and like 50K, meaning maybe we get like an inside bar, maybe this bar expands a bit, maybe the next one gives us an inside bar or some kind of tight high or low in that 47K area, something like that, a continuation pattern would be open to, because at least it tells us that there's momentum on our side. And also in that scenario, that would be letting us know that the bearish momentum behind this large red candle would be losing its control. Okay, so I'm going to leave you with that. Again, if you have any questions, you can find me at greenbridgeinvesting.com. My name is Mark Principato, Mark P Markets. Thank you very much for watching.